You won't believe how close we might be to one of the most unexpected financial turning points of our lifetime. And before we dive deep, make sure you hit the like button and subscribe right now so you never miss any major updates that could impact your future decisions in ways you never imagined. Imagine waking up to a sudden shift in global currency power where the Iraqi Dinar and the Vietnamese Dong rise beyond projections, leaving experts scrambling to update charts and investors questioning whether they completely underestimated what was unfolding behind the scenes. This story goes far beyond what mainstream headlines reveal, because when you analyze the ongoing monetary reforms, oil-driven revenue shifts, regional trade restructuring, and how global governments strategically adjust interest rate policies, it becomes increasingly clear that something bigger is forming under the radar. The RV conversation is no longer just about speculation. It's about the pattern of economic tightening, cross-border settlement reforms, and central bank moves that align with a much larger agenda. When you examine Iraq's recent pushes for digital financial systems, their acceleration toward international banking compliance, and their ambition to stabilize domestic purchasing power, you start to see the architecture of a long-term economic repositioning. Meanwhile, Vietnam's consistent growth and export-driven expansion quietly strengthen the VND in ways many outsiders still fail to comprehend. Markets often move slowly until they suddenly snap into dramatic realignment, and both the dinar and the dong appear to be sitting at that very threshold. What most people overlook is how currency circulation, inflation control, and trade negotiations act like layers of a much larger economic puzzle. As these layers interact, they create pressure points that eventually force major adjustments, and those adjustments can create massive opportunities for anyone paying close attention. Investors who track international monetary trends are noticing that the Middle East and Southeast Asia are no longer passive players. They are emerging centers of economic restructuring with long-term global implications. You might hear rumors online, but what truly matters is understanding the deeper mechanics, supply shifts, reserve diversification, regional alliances, and how countries like Iraq are preparing for a stronger global footprint. When a currency finds support through economic reforms rather than hype alone, that's when the possibility of revaluation becomes more than just a theory. This is why so many analysts keep revisiting Iraq's redenomination discussions, oil production adjustments, foreign reserve strengthening, and digital banking initiatives. And Vietnam's story runs parallel. Steady GDP growth, manufacturing expansion, and increasing foreign investment combine to reshape the currency's potential trajectory. When two rising economies begin aligning their monetary frameworks at the same time the world is moving away from traditional dependency on a single dominant currency, it signals a shift that could redefine investment strategies in the coming years. So, stay focused, stay subscribed, and let's continue unraveling what the big picture really reveals. As we continue this deep dive, it's crucial to understand that currencies rarely rise in isolation. They move in response to long-term structural changes, and before we uncover the next layer of surprising developments, make sure you comment below with your thoughts so far, because your engagement helps push this information to more people who genuinely want clarity, not confusion. Now, when you observe Iraq's economic realignment, it becomes clear that they are strategically calibrating every major financial sector toward international expectations. Their focus on increasing transparency in oil revenue reporting, strengthening monetary reserves, modernizing payment systems, and integrating with global banking networks signals that they are not only preparing for internal growth, but also for a bigger role in foreign trade. This shift matters because global investors track confidence, stability, and compliance far more than they rely on rumors. When a nation demonstrates long-term commitment to stabilizing its currency, building export potential, and expanding international trade partnerships, it begins to reshape the value perception of its currency. Similarly, the Vietnamese Dong continues to gain attention not because of dramatic overnight news, but because of consistent economic discipline. Vietnam's manufacturing sector has grown into a global powerhouse, absorbing production from companies shifting out of China, and that migration of industrial capability injects long-term strength into the VND. At the same time, both countries are navigating new regional alliances that emphasize trade independence, cross-border digital settlement systems, and energy-driven economic expansions, all of which contribute to the potential re-rating of their currencies. Many people underestimate the silent power of foreign reserve accumulation, inflation management, interest rate controls, and regulatory tightening, but these are exactly the indicators expert analysts monitor to predict potential currency movements. While no one can claim certainty about revaluation timelines, the signs of structural strengthening are difficult to ignore. The dinar's narrative is shifting from speculation to methodical economic progress as Iraq increases financial cooperation with international institutions and aligns more closely with global economic standards. The Dong, on the other hand, benefits from an export-driven economy that continues to attract long-term investment from corporations seeking stability in a rapidly shifting global market. When these two stories converge, Middle East energy finance reform and Southeast Asian manufacturing acceleration, the global currency landscape begins to experience ripple effects. These ripple effects influence not just forex markets but global inflation rates, commodity pricing strategies, and multinational investment allocation models. Understanding this broader context helps you see why so many financial observers describe the current moment as a quiet build-up before a larger correction takes place. If you've been following the dinar and dong for years, you already know the journey has been filled with uncertainty, but right now the data increasingly points towards structural transformation rather than speculation. That's why it's so important to stay tuned, stay informed, and
Before
stay
we
engaged.
continue
Unfolding the most critical part of this analysis, quickly tap the subscribe button and turn on notifications because what comes next is the exact type of insight most viewers miss, and it could shape how you interpret upcoming developments in ways that matter more than ever. The concept of revaluation has always been surrounded by debate, but when you isolate speculation from real economic shifts, a clearer picture begins to form. Iraq's commitment to strengthening financial oversight, securing greater regional economic cooperation, and leveraging its oil-backed revenue potential is not happening randomly. It reflects a long-term national strategy aimed at elevating the dinar's standing in global markets. Iraq's push for stronger currency stability aligns with its ambition to increase foreign investor confidence, enhance domestic economic trust, and integrate more seamlessly with international trade partners. These reforms are not overnight moves. They represent the kind of groundwork nations typically lay before significant currency adjustments become possible. Meanwhile, the Vietnamese Dong is benefiting from heavy foreign investment, thriving export relationships, and a rapidly modernizing economy that shows no signs of slowing down. Vietnam's ability to adapt to global manufacturing demand shifts places the VND in a stronger position than many analysts expected years ago. When two emerging economies start displaying synchronized signs of stability, fiscal reform, and cross-border cooperation, while traditional Western markets battle inflation cycles and shifting interest rate strategies, investors naturally shift attention toward currencies with untapped upside potential. The interesting part is how both Iraq and Vietnam have begun enhancing their technological frameworks, from digital payment adoption to banking modernization, which further strengthens the integrity and reliability of their financial systems. These developments hint at an upcoming environment where competitive currencies could gain more visibility on the global stage. Whether the RV happens suddenly or gradually becomes clear through ongoing financial reform, the essential takeaway is that both the dinar and the dong are positioned far better today than they were a decade ago. And while no one can promise revaluation outcomes, understanding these structural improvements gives you a more grounded, more credible framework for analyzing possibilities. It's not about hype, it's about identifying real signals beneath the noise. This is why following credible global economic indicators, not rumors, is the smartest approach moving forward. And as these nations continue evolving their economic identities, the world will be watching how their currencies respond. So stay engaged, keep learning, and prepare for the unexpected because the next chapter in this story could be far more significant than anyone realizes.